Thanks for joining me every weekday after the close here on the final bar to wrap up today's trading action. Think about the long-term trends. My guest today is Greg Schnell, who's a name and a face that's probably familiar to many of you, a StockCharts TV and StockCharts contributor for a number of years. Really excited to have you on. Greg, thanks for joining us today.
Thanks, Dave. Thanks for having me in.
Absolutely. So you sent a couple charts ahead of time, which I appreciate. And the first one is one of those indexes that I find people don't pay as much attention to as they probably should, which is the Baltic Dry Index. Sort of gives a window into shipping and how things are evolving. What are you seeing on this first chart?
Well, the one thing about the Baltic Dry, I find it doesn't help to be very micro on it. You're much better to zoom out to a larger picture, yearly or weekly. This is a weekly chart, but obviously showing 15 years there. So the one thing that I like about the Baltic Dry, you can see it roughly correlates with the XME, which is the metals and mining ETF. And on this chart, what you'll see is typically, if you go back to 2011, you'll see that chart was breaking down as the metals and mining ETF rolled over at the top of 2011. And so you had this big divergence there. And we have that same sort of situation now where the metals and mining ETF is still holding up. But in the meantime, the Baltic Dry Index has plummeted away from it. And so I'm starting to wonder if we're going to experience the big breakout that we want to see in metals and mining. And China is one of the biggest users of metals and mining. So what I want to see out of this chart is I want to see this Baltic Dry Index start to turn back up. That would be good for iron ore. That would be good for coal, for copper, for all of the things regarding industrial manufacturing. And so this Baltic Dry Index being this week right here and trying to hold this 4-year trend line on commodities is a pretty important place. 2016 was the commodity low. So we're looking for this chart to bounce off this particular level, the Baltic Dry Index, but more importantly, we want to make sure that the metals and mining ETF holds up, because much like Dave mentioned, that chart from 2018 to now still has a downtrend, and we've tried to make a slightly higher high here over the July high in the red there. But if this is going to start to break down, this metals and mining ETF, that would be very cautionary for us.
It's a really, really good chart, and I love the long-term take on it, Greg. The second chart that you sent was related to China. Obviously, all eyes on China with news coming out with the trade negotiations, et cetera, et cetera. This is another, good long-term view of this space. What is the Shanghai Index? What are you seeing here?
The one thing that I like on the Shanghai is obviously there's two sides to the biggest trade deal going on, the largest market and the second largest market. So we want to see this chart take off much like the S&P 500 has. And what we see is for the last 3 or 4 weeks, it's migrated sideways. And once we get today's close, we're going to end up right at the black line, the 30-50 line. And now the virus would obviously add pressure to this chart and maybe not help us with the underlying. But what we want to know is, does this chart have enough momentum to actually break this 2-year downtrend? And this trend started down in 2018 when the talk of tariffs first started. And most of the metals charts also have a top in there right around the top of 2018 January. So we're trying to see if all of this can merge out of this together and get that global growth that we talk about started again. Obviously, as we're nearing the end of this pennant, that's a pretty close place. And we don't have a lot of momentum on the PPO. We're very close to zero. Looking left on the chart, when that goes below zero, that would be a problem. So we want to make sure that we stay in positive momentum. So we don't have a clear answer yet out of the trade deal as to which way this chart wants to break.
It was a really, really good point. So I think at the very top, the relative performance of Shanghai versus the S&P, that's obviously another part of the story, is just thinking about what it means for, North American-based investors. Now, what's interesting about this last chart that you sent about copper, people love to think about Dr. Copper and implications for broader market health. And when you're thinking about China, obviously the, base metals become sort of important. What are you seeing here?
Yeah, we'll notice that the chart tops out in January of 2018, and shortly after that we had the tariff talks, and so we've been gently sliding lower, roughly down about 25 or 30% off the highs. But the main thing that I like to focus on with the PPO at the bottom is when we roll over near zero, this is an important place on the chart to be aware of. So we want to see this chart start to accelerate higher, much like it did in November 2016. And we're just not seeing that yet. So it doesn't mean it won't happen, but we have 5 weeks or 4 weeks now of the histogram being slightly lower. And so we want to start watching this chart for momentum to the upside. And that would really help me understand that we're going to get this global reflation that we're trying to get and the global inflation we're trying to get all of the emerging markets moving forward. So this is a pretty important chart because everything's very tentative, just barely above zero. The steel chart, the oil chart, the Shanghai composite chart, lots of them are just barely above zero. So this would be a place to watch for acceleration or failure. And we're right on those trend lines now.
Greg, those are 3 fantastic charts. Thank you so much for coming on, sharing your take on the world. We appreciate it.
Hey, thanks a lot, Dave. Thanks for having me. Good luck, everybody. Bye-bye.